Hi everyone. So if you Google the word recession 2023, you will find a lot of contradictory information. For example, Goldman Sachs is saying that there are 10 reasons there won't be a recession. On the flip side, banks like Bank of America are saying that recession is going to eat up the markets in early 2023. Then people like Elon Musk are giving their own commentary, bunch of other economists are giving their own commentary. So what exactly is happening? Because the confusion is happening even at the government level. For example, Joe Biden, who is the president of the US, he says that we are nowhere close to the recession. But on the flip side, his central bank chairman is saying that we will enter into a recession because of our fight against inflation. So there is a lot of confusion that is happening at all levels. So I thought that I will help you understand this complicated topic in very easy to understand language. There are 4 specific points that I'm going to discuss, that who exactly is right about recession, because in India also commentary is that there is no recession that is happening. Is it really true or not? Second key point, how a recession is going to impact the stock market in 2023. So in case you are investing right now, or if you plan to invest in 2023, it becomes an important point for you to understand. Third, and a point which very few people are discussing, how exactly are we going to come out of recession? So I'm going to share my viewpoint. Fourth and finally, I'm going to discuss how I'm preparing my portfolio to deal with this recession. So let us kickstart our discussion, and just a very quick investment oriented point. I feel that the US stock market, or the total US market, which is S&P 500 or Nasdaq, if you buy indices, they are at a very good level. This is not a buying selling recommendation, but I feel that the US market is at a very good level. I am investing heavily in the US right now because you might have already seen that Nifty has already given a breakout. It is trading at its all-time high almost, but the US market has not done the same. It is very likely that US markets too will trade at their all-time high. So it is a great time to build positions in the US stock markets. Many of you keep on asking me, how do I invest in the US stocks and how do I buy the total index in the US? So you can check the links in the description box and purchase US stocks by using Vested. I have also put some of the Vest. Vest means that which stocks am I buying in the US, so you will get access to that Vest also. This is completely free. So let us kickstart our conversation, and first and foremost, let us quickly understand what recession exactly is and who is right about recession. So point number 1 is that, are we in a recession? The short answer is yes, we are already in a recession. There was a recession that already happened in 2020, and there is another recession that is happening as we speak. But first and foremost, let us quickly understand what is the meaning of recession. So here is the definition, that a recession means a significant, widespread, prolonged downturn in the economic activity. Now, how do we measure economic activity? We generally tend to do it in terms of GDP. What type of GDP? We usually do it inflation adjusted GDP, which is also called as real GDP. Now, there was a very interesting word here, which means prolonged downturn period. Now, there is no set definition that, okay, prolonged period means 2 months, 3 months, 2 year, 5 year, nothing of that sort. Basically, economists typically agree on the fact that if 2 quarters of GDP has shrunk, what type of GDP? Real GDP. If it has gone down for 2 quarters, then theoretically we are in a recession. So then comes the natural question, that are we in a recession really? Okay, you can go and check the data, and this data can be easily Googled. And if you Google the data, India's real GDP growth from 2017 to 2027 forecasted, what will you find? You will first and foremost find that GDP shrunk here and it shrunk here. So 2 quarters of poor growth. So definitely a sustained period of poor growth. And again, now it is forecasted that GDP is going to fall in the year 2023. So this again becomes recession 2. This was recession 1. I hope this point is clear. Now many of you would be wondering that, okay, why did the GDP real growth rate increase here? Well, it increased because there was more money that was printed. In case you don't know how money printing impacts the GDP, I had done a separate video on that topic. I will link it down in the description and pinned comment. You can go and check it out. It will help you understand macroeconomics more holistically. On a side note, if you enjoy this type of content where I am talking about macroeconomics, helping you understand things fundamentally, do consider liking these type of videos. It would allow more people to understand the concept behind things. That is the real intent with which I make videos. And if you're enjoying the channel, do consider subscribing to it as well. Now, India is a big part of the world, a very important part of the world, but we also need to take a look at other areas of the world. So let's start with the most important economic area of the world, which is the US. And what is the commentary there, and what does the real GDP growth tells us about recession in the US? So again, the situation looks somewhat similar, that there was a period when the economy declined from 2018 to 2019, and then there was another decline. So this is definitely a period of recession, one could argue. And again, the same thing happened, that there has been 2 periods of decline. In fact, it is forecasted that even in 2024, the US's GDP is going to suffer. So this is a sustained period of recession. Now, in case you are interested in figuring out the growth rate across different parts of the world, here's a quick chart. You can pause the video. But understanding of this data is not critical. Now, IMF has also presented a lot of studies, detailed debriefs, region-wise, all this stuff. So you can consider taking a look here. But to cut the long story short, the world has already suffered 1 round of recession, and now it is undergoing the 2nd round of recession. So then comes the natural question that, okay, you are talking about that we have already been through a recession, another recession is going, but I have not heard about it. I have not read in the newspaper that we are in a recession. It is because of the fact that recession is a lagging indicator. Now, what is the meaning of lagging indicator? Let me explain. So let's say that this period and this period had bad economic output and the GDP shrunk here and here. Now NCBR, so this is a government organization in the US, it will sit somewhere here, and it will then say, looking at the economic output in 2019 and 2020, it will then declare a recession. They usually evaluate the data on 2 quarters, not on 2 years, but I hope you got the point. In India, the declaration of recession happens by RBI. So all these agencies take time to compute data here and here, and then they finally declare that, you know what, this previous period was a recession period. Now, another way of predicting recession is, because the previous data that I had shown you, it was forecast based data. But there is another way of predicting recession, and it is called as analyzing the inverted yield curve. So whenever yield curve inversion happens, usually it is seen that recession follows. For example, on this chart, you will see this blue bar. You will also see this line. This is 0%. And this entire thing indicates a spread. Spread means difference between 2 things. So this indicates the difference between 10-year bond yield minus 2-year bond yield. 10-year is long-term bond yield. 2-year is short-term bond yield. Bond yield means what? It means the interest rate on bonds. Now, usually what happens is that if you are holding a bond for a longer duration, 10 years, 12 years, if you do an FD, you are supposed to get higher rate of returns, right? Not lower rate of returns. But yield curve inversion tells us that the short-term bond rates have gone up compared to long-term bond rates. And therefore, whenever this blue chart goes below this red line, it means a yield curve inversion has happened here, all these places. Yield curve inversion has happened. It has almost happened in 2020. And again, it is happening somewhere here. So you can backtest this. So let's consider 2000. This was the dot-com bubble crash. The recession happened when? The recession happened somewhere in 2001 onwards. What happened after 2008? The crash happened somewhere here. This was yield curve inversion. And then this gray chart, this indicates the length of recession. So the recession technically happened somewhere from 2009 onwards. What happened in 2020? There was a very brief period of recession. What is happening at the end of 2022? So recently in November, the yield curve again inverted, and now people are forecasting that 2023 recession is going to happen. Yes, recession is going to happen. Do you need to panic? So let us understand that in the next section. Now, in this section, let us quickly analyze the impact of recession on the stock market. Now, recession has a very different impact on economy, and it has a very different impact on the stock market. Why is that? Because economy is a lagging indicator. Stock market is a forecasting indicator or a leading indicator. Stock markets today, whatever prices you are seeing, for example, hypothetically speaking, if today Nifty 50 is at 18,700, then what does this 18,700 signify? In simple words, it signifies the strength of the economy 6 months or 12 months down the line. Right now, people are slightly optimistic that economy will be fine 6 months, 12 months down the line. Therefore, the valuation in Nifty 50 has gone up. So, stock market is a leading indicator, while economy is a lagging indicator. There is a lot of pessimism in the economy right now, but when you're a stock market investor, you need to think about the future. But is this pessimism going to become worse with time, or is it going to improve in the next 6 to 12 months? And that is how you will have to make your buying and selling decisions today. So let me break this down and hopefully it will make more sense. So this study has been done by a wealth management service called as Darrow Wealth Management. So they have analyzed all the past recessions and they have talked about how the stock market get impacted during a recession, 6 months before, 12 months before, 6 months after, 12 months after, 2 years after. So this is a very interesting case study. And the biggest finding for me was that if you check 1953, stock markets actually went up during a recession. So once the recession announcement is made, stock market continued to climb up. This has mostly happened, right? You'll see mostly positive things only. Hardly very few times negative has happened. A classic anomaly to this rule has come in 2008 crisis, that during a recession, the markets acted very badly. Now, why was that the case? If you know the answer, then you have already mastered the stock market, so to say. Okay, so here is the real reason why that happened. Because in 2008 crisis, it was the first time when quantitative easing was experimented at a massive scale. Ben Bernanke has been given the Nobel Prize of Economics this year, and it has caused a lot of stir in the economy because of the moves that he made in 2008. He followed a loose monetary policy. Now, why was he given the Nobel Prize? It is very easy, because in 2008 probably was the worst man-made type of financial crisis ever, the repercussions of which is still evident today. And that is when the government realized that, you know what, we have infinite money printing power. Behold, the printer, we will just print whatever we like. You do whatever you like, right? And how did they realize it, that they have infinite money printing power? Well, it was very simple, because from 2009 to almost 2012, 2013, recovery had not happened. Why? Because it was a W-shaped recovery. It was a very, very slow recovery and painful recovery. Now, during that phase, the government realized that if we keep on injecting the market and keep on printing more money, throwing more money, then eventually the economy will recover. And guess what? That is what happened. Now the roadmap was ready. By 2020, this roadmap was very clear that COVID crisis happened, Nifty was at 12,500. Print a lot of money, dump a lot of money, use the Ben Bernanke principle, and there you go. The stock market skyrocketed like anything, and that is called as V-shaped recovery. So this was one of the rare periods when the W-shaped recovery had happened in the market in 2007, 2008, and therefore you are seeing stock markets doing poorly during a recession. Otherwise, it reasonably does well. Now, the second interesting data point from this chart is this, that what happens before a recession. For example, right now, recession has not been declared. But if you study the last 1 year, so this is the bucket that you are almost trying to study, stock markets have generally done poorly, right? You will generally see this. So this would have done fairly poor. Now, what happens after 6 months? The recession is declared. Now, this is very interesting because this is extremely positive. So if people are believing that in 2023, recession is going to be declared, so okay, so hold your stocks till December of 2023. You are sitting in one of the most profitable zones here and here. So this is where real money is made. So you can draw a lot of inferences from this data set. So I will leave it up to your creativity. So study this data well and let me know what you plan to do in the stock market. Right now, I'm investing and building more positions in the US stock market simply because their index is deeply discounted. And if you have a holding period of this, then this is the amount of return you could theoretically make. Now you will say that, okay, Akshat, you are trying to push your viewpoint on us, this, that. Okay, so no, you don't need to take my viewpoint on it. You need to study the contrary commentary also. So I am explaining you the con side of it also. So this is what Bank of America says, that next year, the stock market could come down by 24%. So who says this? So there is a person called as Savita Subramaniam, who is the bank's head of US equity strategy. So according to her, this is likely to happen. So this is contrary commentary to what I had said. What about Goldman Sachs? So Goldman Sachs says that, okay, softish landing. So what is the meaning of softish landing? It simply means that there will be a brief recession and then it will be fine. There is no major problem per se. All the banks are giving you different commentary. I have explained my commentary by giving you data facts. Now it is up to you how you process this information. In case you want to learn advanced economics, I keep on writing more detailed exclusive posts on YouTube member community. I keep on discussing about individual stocks also. So if you feel that that is useful, you could consider joining that community. It is for slightly advanced users. So now comes the natural next question that, okay, fine, recession is there. I understand it, but how will we come out of recession? What exactly will happen that would enable us to come out of recession? So it's very simple and it is called as credit lending rate. Now here, if you see from the chart, you will see that there has been a steep incline in these interest rate. The interest rate have generally climbed up very fast over the last 1 odd year. We were almost sitting at 0% and now the US Fed has increased the rate at 4%. This is the mother of all interest rate. This interest rate indicates what your home loan rates are, they have become more expensive. What car loan rates are, they will become expensive. What education loan rates are, they will also become expensive. So in order for recession to go away, you will start seeing easing of interest rate. What is the meaning of easing of interest rate? So I'm drawing the green line here. You will see these interest rate falling like this and settling to a new normal. It might or might not be 0%. I don't know. I'm not qualified enough to speak about that topic. But unless you see falling of the interest rate, we will get stuck in that recession period. So then comes the natural question that, okay, fine, what do I do with all this information? Can I use it to make money? Yes, you can use it to make money. And for this, you should listen to Bill Ackman. He's a hedge fund manager. He has managed $1 billion of portfolio. He's a billionaire himself, makes very good investment. And here is him giving a very balanced advice.
It's much easier to make money in the stock market in a rising stock market environment. And if rates, a declining interest rate environment is generally a market in which asset prices increase. And so a rising tide lifts all boats. So if you just own equities, I think, right now we're in a rising interest rate environment. So that's obviously more challenging. And really, I think that what matters is, are the central banks around the world going to stop this out of control inflation? I would say, I think they will. And what's the new level of long-term inflation? Is it going to be, are we in a world where it's difficult to create, where the federal, as recently as, 24 months ago, central banks around the world were worried about deflation. And that's been a very, very dramatic change. I think you can do very well as a stock market investor if you find really high quality companies and you buy them at attractive prices. And I think today, is a pretty good time. It's a pretty good point of entry, right? March of 20 was obviously a very, very good entry point. And anyone who bought stocks in March of 2020, something I went on TV and advocated on March 18th of 2020. I said, this is a moment. I think this is sort of another moment where I don't know how well you're going to do over the next 3 or 6 months, 12 months. It's a highly uncertain world. But over the next 3, 4, 5, 10 years, it's a pretty good place to be an investor, or time to commit more capital to equity markets. Although you got to pick carefully. You want to own the super high quality, well capitalized, dominant businesses that will be here, 30 years from now. And that's why we own companies like Hilton and Universal Music and restaurant brands and so on.
So there are 3-4 key things or terms that he has used. If you understand this, again, you will increase your probability of making the money. So the first thing that he said was that the governments were worried about deflation at one point. Now they are worried about inflation, and therefore they have increased the interest rate. What is the meaning of deflation? Deflation simply means when consumers and asset prices decrease over time. It is the general decrease in prices. Inflation means increase in prices. So deflation is opposite of inflation. The interest rate hovers around 0%. Therefore, the purchasing power go up because people do not want to save any money. They want to spend everything. So now there is a shift that has happened that few years back, people were worried about deflation happening. Now they are worried about inflation happening. Few years down the line, again, deflation will happen. So all the high inflation that you are seeing in the world, it will come down. So therefore, it means that if you are holding your stocks for a slightly longer perspective, good companies, then you are going to make crazy amount of money. Second key point he said was that it is easy to make money when interest rates are getting cut. Right now, what is happening? Interest rates are rising. Again, take a look at this previous graph that I discussed, that the US interest rates are inching towards 4%, which is fairly high, and it is a rising interest rate environment. Yes, right now the Feds are becoming dovish, not hawkish on the interest rate. They're saying that, we'll mellow down the interest rate subsequently. Our rate of interest hike is not going to be very steep from now on, but we will still continue to increase the interest rate. So we are in an environment where interest rates are going higher, higher and higher, and they might continue to go higher a little bit. And it is really difficult to make money in this type of market. But once the interest rate starts to get cut, that is when you are going to make crazy amount of returns. So now you will say that, okay, Akshat, you have given a really complicated macro commentary. Okay, recession in itself is a very difficult subject to understand. Therefore, there has been so much confusion between US president, their Feds, whatnot. All the economists are confused. I have related it to the stock market. According to me, this is what I'm doing. I had already made a lot of significant purchases 6-8 months ago. I am booking some profits. I'm converting some of my money in cash. I'm still going to be 50 to 60% fully invested in the market. But at this stage, I'm cutting overvalued stocks. For example, I feel that banks, FMCG sector has become slightly heated. So I might book 20-30% decent profit in these segments, and I might rotate the capital into undervalued segments. There is a video that I've done on my Hindi channel. It is about consumer durable goods. You can go and watch it. According to me, that is an undervalued opportunity. Right now, small cap and mid cap stocks are undervalued. Large cap blue chips are mostly saturated according to me, or rather, most of the large cap blue chip are saturated. So I will be exiting some of my position and booking partial profits in some. I will keep on revealing it on member community tab. But the important point to be noted is that I am not exiting the market. I am 50-60% fully invested in it, reserving some money because I am quite confident that the market is going to trade in a channel from this point. For example, the channel might get formed between 17,600 level all the way to 19,500 levels. So let me watch how that channel is getting formed, and accordingly I will start building bulk position when the time is right. But I hope you enjoyed the conversation. You were able to get a lot of valuable stuff out of it. Do check my commentary on the member community tab. Do check out my US stock portfolio. You will be able to find a lot of useful information. I hope you enjoyed the video, and I will see you soon.